Man, what a crazy day today. This is day 3, at least for me, of watching this GameStop fiasco unfold. And man, it just keeps getting juicier and juicier. I trade stocks on a daily basis and I watch this stuff all the time. And it's not uncommon to see a stock go up, 15%, 20%, sometimes even like 40% in a day. Once in a while, you'll have one go up like 100% in a day, so it'll double. It's pretty uncommon, but it usually happens because there's like some sort of news that comes out. But GameStop in the last week has gone up a lot. Let's open the chart here. I figured it'd be fun just to do a video going through this stuff because a lot of people are starting to pay attention to it, but a lot of you guys and gals might not really understand the stock market that much. So hopefully I can help you understand some things. So let's look at GameStop here. So this is, you can see this chart here. Here, let me make it one chart so it's easier to see. All right, so it's funny to me because I look at charts all the time, and this is a timeline here. You have 2021, so this is like the first day of the year. You can see all the way back to the beginning of December on this chart. And this stock was trading at about $17, give or take, for a long time. And then right around January 12th, it woke up a little bit, doubled, went up 100%, which would have been a big move. And it hung around that level for a while. And then around the 23rd, it doubled again. And you can just see what happened from there. And so this first huge move was on the 25th. Today is the 28th, so 3 days ago. This is when it caught my attention, when we saw this huge spike up to like 160. That's just insane. And so what happened is you've got this Reddit thread, or the subreddit called Wall Street Bets, where somebody pointed out that the short position on GameStop, GME, was like 140% or something of the float. This is a really good website. It's called isthesqueezesquoze.com. And they give a pretty good synopsis here. So, okay, listen up. If you're late to the party, you crayon-eating homo nucleus, here's what's going on. Over the past year, hedge fund supervillains have made money selling shares of GameStop they don't actually own. They've just borrowed them. Short selling. If they sell enough, they can drive the price down so far that when they eventually need to return the shares they borrowed, they get them really cheap. Okay, so if you don't understand how this stuff works, if you're trading in the stock market, you can do what's called selling short. Selling short is like selling stock that you don't actually own. What you do is you borrow the stock from people that do own it, and you don't actually borrow it from a person. The stock exchange will let you borrow shares with the agreement that you will buy shares at a later date to give them back. And what these what do they call them, hedge fund supervillains do is they'll sell so many shares short. So they'll sell so many shares that they don't own that it actually makes the price of the stock go down. And then they'll buy it back later once it's lower, and they'll just make money. And since they have enough money to do this in such a high volume, this guy calls it like free money. This is what they do. They find companies that are struggling, that don't get a lot of attention, that aren't very popular, and they'll just short the crap out of them. And let's see, down here, they borrowed and sold a record amount. They sold more shares, in fact, than are actually traded. Far more than GameStop's float. So the float is how many shares there are in total. So I don't know how many shares there are in GameStop, but let's just pretend there's 100,000 shares. There's way more than that, but let's just pretend there's 100,000 shares. This hedge fund actually sold short like 140,000. So way more than even existed, which is illegal. Like that doesn't make sense. You can't sell more of something that even exists. this is one of the problems. You're not supposed to be able to do that, but these guys did it anyways. And on this subreddit, Wall Street Bets, get out of here, dude. Quit begging for me. Go. Get. This subreddit, Wall Street Bets, somebody pointed out that, hey, you guys, there's this hedge fund has sold more shares than even exists. Let's create a short squeeze. Okay, so what's a short squeeze? A short squeeze occurs when a stock or other asset jumps sharply higher, forcing traders who had bet that its price would fall to buy it in order to forestall even greater losses. So I already explained to you that selling short means selling stocks that you don't actually own with the agreement that you will buy them back later to give them back. And so you do this if you think the price is going to be cheaper later. And you especially do this if you know that if you can sell enough of these stocks short that you will force the price cheaper. And so you're almost guaranteed to pay a lower price later, and you're just making free money. And a short squeeze happens when somebody sells a stock short, but the price starts going higher. And so automatically they're going to lose money on this trade because they have to buy it back to give it back, and the price is higher than they sold it for already. And if they don't buy it back right now and the price is going up, then they're going to lose even more money. And so it creates what's called a short squeeze when a lot of people are trying to buy stocks to cover these short positions they have. And that itself drives the price higher because everyone's trying to buy them as quick as they can so they don't lose any more. And so the whole idea was if they could, the people in this subreddit could get enough people to buy GameStop shares and force that price higher and higher and higher, it would force these hedge funds into a squeeze, forcing them themselves to have to bid higher and higher on these stocks to get out of this hole that they're in. And that in itself is a pretty wild thing. But what happened today was absolutely insane. If we look at the chart just for today, let's make this a 5-minute chart. So let's see here. This colored band, this blue part is like after the day's over, and this yellowish part is like in the morning before the stock market opens, and this dark part in between is the day. So what happened last night is not a whole lot. The stock market closed right here, and GameStop went down a little bit, and this is about when people were kind of getting afraid because it was going down. This morning, as soon as people were able to start buying, they just started buying like crazy. Look at that. It went from 268 all the way up to 500. So just about doubled. And this is before the stock market even opened. And then, we saw the price go back down. By the time the stock market opened, it was all the way back to where it was. And the price immediately took off when people started being able to buy. And I was trading this morning, all of the systems, Robinhood, everything was crashing. You could hardly do anything. There were so many people trying to trade at the same time. And then around 7 this morning, Robinhood and a couple other stock trading platforms made it so people could no longer buy GameStop. And what this did was created a huge cascade of the price you can see here because people were only allowed to sell. They weren't allowed to buy. And this is where it gets really juicy because that has got to be illegal. Like, that's not a free market. That is, a bunch of market makers like Robinhood manipulating the market by controlling what regular people can and cannot buy. Total bullshit. And what makes this extra juicy is that one of the hedge funds that's involved in this is actually where Robinhood makes about 40% of its income. So that they're in bed together. And I heard another guy, let's go through some of these. Somebody was saying, oh, here he is right here, Interactive Brokers. That's another one of these stock platforms that shut down trading on GameStop. And this guy says When asked why they halted trading, he said, honestly, to protect ourselves. You know, there it is, right out of the horse's mouth. Let's stop people from being able to trade so that we don't lose more money because we were caught with our pants down cheating the system. And the BS part is that these hedge funds and these big trading firms have been doing this for years. They short the crap out of stocks and ETFs and all sorts of stuff, and they force prices down, and they do this over and over and over again, and it comes out of the pockets of normal people, like the people that were trading GameStop. And you know, they've been doing this forever. JP Morgan has even been fined billions of dollars for doing this to the silver market. They're able to, you know, let's just Google it real quick. Let's see, JP Morgan silver fine. Look, there's a search right there. September 29th, 2020, JP Morgan settles spoofing lawsuit. JP Morgan settles lawsuit that accused firm of spoofing precious metals markets trades. Let's see, how much was it? $920 million to resolve this investigation. They wouldn't pay that if they weren't guilty, and they've paid these fines for the same thing multiple times. And it's common knowledge now that they manipulate the price of silver by shorting an ETF. One of them is called SLV. This is another one that they're constantly shorting. And the funny thing about this one is by shorting this market, they're able to actually affect the price of silver, like physical silver, like a silver coin or jewelry or anything like that. They're able to hold down the price of silver by selling short these ETFs, which are just paper or digital. They don't even exist. They're not even a real thing. And JP Morgan shorts the silver market, lowers the price, and then they turn around and they buy physical silver, coins, bullion, bars, all that kind of stuff. And they've actually amassed, like, I don't know, let's just see how much they have. How much silver does JP Morgan have? At least 600 million ounces. The last I read, they had 1 billion ounces. So on one side, they're shorting, lowering the price. On the other hand, they're buying millions of ounces. Bullshit. And the reason I brought this one up is because Wall Street Bets, the subreddit or the forum of people that are responsible for this GameStop fiasco, have turned their sights on SLV, which is this silver ETF. Which, if they did this, if they managed to create some kind of short squeeze on this silver ETF, it would light the precious metals market on fire. Mining stocks would be going up. Gold prices would be going up. They would no doubt, they would 100% shut down all these trading platforms, because the biggest banks and hedge funds in the world would be losing their shirts to retail. Retail is like regular traders like you and me. So I would love to see that. I really hope it happens. I hope that they turn their sights on it. That would be really great. But either way, hopefully that helps you kind of understand what's going on. Here's Wall Street Bets, reddit.com/r/Wall Street Bets. You can go and see exactly what they're doing, what they're talking about. There's also this is the Squeeze Squoze. This is a website just about this one topic, this GameStop fiasco. So check it out. It's very interesting. If you are looking to get into a trading platform, I recommend staying away from Robinhood. I will be taking all my money out of Robinhood and moving it somewhere else, because I don't want to pay, or I don't want to be even a part of any platform that's going to restrict the rights or the ability of regular people to buy and sell stocks, especially right in the middle of one of the biggest moves of our lifetimes. It's total cheating, it's totally rigged, and it's just no good. So tell everybody you know about this. Get involved. Don't put your life savings in any of this stuff. be responsible with your money. Don't trade with anything that you can't afford to lose. But this stuff it's history in the making. It's super interesting, and I hope you found this video interesting. All right, take care.